The asset quality is the one which is in focus, and that has definitely improved. If you look at the numbers sequentially, the numbers are flashing there on your screen. The net profits which have come in at 1124 is just about in line. The net NPA is 0.98 versus 1.09 which was seen in the previous quarter. So sequentially definitely there's been an improvement, but as Neeraj highlighted, let's wait and watch out for the NII growth number this time around, and we'll also get our research analyst Shraddha Babla to decode the numbers for us. But in the meanwhile, I guess we've got Lalitabh Srivastava of Sharekhan, who joins us on the show now. Hi Lalitabh, good afternoon. What have you made of the initial numbers that we're getting? There is some bit of improvement that has been seen for the asset quality. The provisions too have come in a little bit higher than we've seen sequentially, of about 307 crore is the number, if I'm reading it correctly.
I have to get hold of most of the numbers, but the headline numbers that you have told largely seem to be in line with what we were also factoring in. So we were factoring NII of somewhere around 2,550 crores and a PAT of 1168. It has more or less been in line. Provision numbers, I think, are slightly higher than our expectation.
I've got the net interest income number here, Lalita. For the fourth quarter, it's up 19%, which is coming at 2580 crore. And I think our estimate, the Bloomberg poll was showing somewhere about 2514. So slightly above what we were expecting in terms of net interest income. What have you made of that number?
I think it is slightly better than my estimate also. So far, I think a good thing. Plus, the asset quality numbers on a sequential basis on an absolute terms seems to be fairly stable. And NNPAs have actually declined on a QOQ basis. So that is another thing that I think can be taken as positive. I'm still going to the numbers.
Okay, so NI looks good according to you, Lalitabh. It's been slightly above what the street was estimating. The asset quality has improved. I'm also looking at the NIMs, the net interest margins for the fourth quarter. That's coming at about 4.3% versus 4.63, which was seen in the corresponding quarter of last year. 4.35, how's that number looking like?
Much better, much better. We were expecting around 4.2% levels, so much better than our expectation.
Yeah, broadly, asset quality and the NII higher, and which is what should be helping the stock. Lalita, what's the pecking order for you? I mean, is Kotak, after the run-up and the stellar run-up that we've already seen, still a buy call at Sharekhan? Lalita?
Hello, okay. Am I audible?
Yeah, Lalita, you are. Now you're audible.
Yes. So far we have a buy rating. We have a positive rating on Kotak Mahindra Bank. We believe this is a very good long-term story, and the subsidiaries are also gaining in size and also starting to contribute on the overall numbers side. So that is another positive that is coming up. So basically, we will have a relook at the numbers, but as of now, we are positive on the stock.
Okay, we'll let you go to have the relook at the numbers as well, Lalita. Thank you so much for taking the time out and being with us. Shraddha Babla, I'm told, joins us as well. Shraddha, we have the broad numbers. I thought the NI and the net NPA numbers looked fairly promising.
That's correct, Neeraj. The details, the additional details that I have at the net interest margin has come in at 4.35% versus a number of 4.20% in the December ended quarter. So we are actually, instead of some compression, we are actually following NIMs rising, so which is a good thing. PAT growth number, again, you've already mentioned gross NPA number, you've already spoken about. The other number that we have is the loan growth number that is coming at 25%. So again, that is at a multi-quarter high. In the third quarter, we had seen a number of 23%, that's coming at 25, and provisions for the quarter have come in at 306 crores versus 212 in the previous quarter. So there's about 100 crore sort of addition in terms of the provisions, and gross NP on an absolute basis also there's just 100 crore addition. So overall, and that apart, they've also mentioned that they haven't used RBI's dispensation with respect to spreading bond losses, the MTM bond losses. So overall, yes, everything based on the number that we have so far seems in line, overall steady quarter, just as was expected from Kotak Bank.
Okay, Shraddha, thanks a lot for bringing in all those details. A steady quarter from Kotak Mahindra Bank, and clearly, as you can look at the stock price, it's trading above the mark of 1200 right now. Clearly reacting positively to good set of numbers, trading with gains of nearly 2%. That's for Kotak Mahindra Bank. And remember, the asset quality, the NII growth has been has been much better than what the street was estimating. Probably these are the factors which are providing some bit of fillip to the stock price as well. Net profit, however, has come in at 1124 crore. That too seems to be in line, Neeraj, what the street was estimating.
Yeah, and showing in the stock doing 1210, continue to trade at new highs. It's been an afternoon of new highs for a select band of stocks on the index, that is the likes of Kotak Bank or HUL, for example, which is trading at new highs for itself as well. The select band which is doing reasonably okay. IT is making a bit of a comeback, and banks are not doing all that badly. All of that put together, we have a robust trading day, 0.5% higher for all the key indices, and it stayed that way for most part of the trading day, which is actually a good sign. Let's get you a global voice then, something that we do every Monday, and a global voice with active interest in India. Jonathan Schiessl, he's Chief Investment Officer at Ashburton Investments, joins us right now in our studios. Jonathan, good having you. Thanks so much for taking the time out. What's the view for the global markets at large and India individually as well? The last 20-25 odd trading sessions, or the last 1 month, has been positive despite the fact that the macro cues and the macro indicators, the bond yields, the currency, etc., are not going in the same way as bulls would like them to.
Yeah, absolutely. I think globally, clearly, that the volatility certainly has been increasing. Eyes are focusing on US interest rates, obviously the 10-year yield around that 3% mark. And obviously the dollar, so that's providing a little bit of concern in some quarters. I think emerging markets have been an area where global investors have been investing for some time. India, if I'm honest, is an area which I think isn't of huge interest at the moment to most global investors. Foreign investors, actually, their weighting in India is probably 5 or 6 year low. Most foreign investors are probably looking a little bit more to China and some of the other commodity type plays than India today.
Well, why would that be the case, Jonathan? I mean, so one, it is evident by virtue of the last 2 months' flows that FIs have, if anything, been pulling money out of India, both the debt markets and the equity markets. I mean, are people waiting for valuations to correct? Are people waiting for the macros and India-specific macros to improve? What's the trigger that could change this?
So I think it's two things. I think you're quite right. Clearly valuation has been a concern. It remains a concern. It's something I often hear over the last 2 or 3 years. That obviously we need to see earnings to deal with that, and obviously that hasn't come through. So I think most investors, they've heard this sort of jam tomorrow story. The economy is going to start improving again. The investment cycle will start kicking off again. But the fact is we haven't yet seen concrete evidence of it. Now, right, we haven't got disruptions now like we've had over the last couple of years, potentially. So it should start coming through. But I think people want to see evidence before they actually probably head back into India.
So is it valuations and earnings, or the concerns which we've been highlighting for the likes of rupee depreciation, the crude oil prices which have been inching higher, that does not augur well at all for Indian economy?
I think you're right, but in my conversations with investors, I think if you look back, say, to the taper tantrum, you go back a few years back, and you look at the macro situation of India then to today, and actually some of these other vulnerable emerging economies, I think a lot of the excesses have been worn out. So I agree, at the margin, the macro certainly has got worse in India. So the concerns now, previously the macro was great here a little while back, but the bottom-up story wasn't so good. Now as the bottom-up story hopefully starts improving, the top-down story has got a little bit worse. So it's a bit of a mixture. Really.
Okay, you know what, these are the primary concerns which everybody's been highlighting, but there were few developments which took place. For example, LTCG being imposed post the budget, and obviously the Indian exchanges said that we're not going to share data with the global exchanges. Do you think these factors have also led to cut down of passive investing which was taking place in India through ETFs or any other route?
Potentially. I'm not so concerned about foreign investors because the reality is they haven't really been buying this market for 2 or 3 years. So it's not like everybody's overweight. Most people we speak to, they might be marginally overweight. Okay. But they used to be very overweight. And so I think actually that there is potential for foreign money to come back into this country, but probably in the second half of the year. But yeah, at the moment, there are factors everybody's worrying about, but they're not really new.
It's an interesting assortment of holdings that you have. We've culled it out, of course, of the terminal, I believe. But you're present across a wide spectrum from financials, wherein HDFC is your top weightage, to having Infosys and HCL Tech, and certainly seems to be the case that you are betting on technology fairly favorably amongst your other holdings in India.
Yeah, I think so. For us, when we think about constructing a portfolio, having a balance is very important. And certainly from a rupee perspective, we do like to have natural hedges. It is very expensive for us. We're always thinking about foreign investors who are coming into this market, and clearly the call on the rupee is a very big one for them. So naturally, we tend to have some exporter exposure in there to naturally hedge that risk, if you like. We are quite underweight technology, actually, but yeah, we do have a couple of big holdings.
Oh, you're underweight technology.
Net,
yeah.
You're underweight.
Yeah, we've only got two, obviously, stocks. It's a reason. Tech has done reasonably well over the last 6 months.
Yes. So why are you underweight?
We went in a little bit early, shall we say. We've been in the space for some time. It was looking great value. 6 to 8 months. We were upping our weight then.
Okay.
Potentially, we've been looking at 1 or 2 counters to add into, and they just haven't come back down to the valuation point we've been.
But do you think the valuations have run up too much now at current levels?
They've certainly done well. I think whether we're a screaming buy from a valuation perspective 6 to 12 months ago. I think now, obviously, we need to see earnings coming through. You haven't got that valuation comfort behind you anymore. But I think compared to other pockets of the market, they still look quite attractive.
Some of the bets that you guys have taken, and then we would want to talk a bit about the global macro as well, Jonathan, but some of the bets that you guys are taking in India seems to suggest that you are doing a lot of bottom-up analysis before you buying as well. It is not necessarily just a top-down call. A clutch of names out here are names that not too many institutional investors generally have, or global investors have in the portfolio.
No, absolutely. I think it's interesting if you look at the market the last few years. It's gone. The last couple of years have been very bottom up. I think we're actually moving back into more of a top-down phase where the macro call, the sector call, is going to be incredibly important. And we haven't had that for a few years in India. That said, absolutely. There's so many exciting companies here that we look to invest in. It would be a shame just to stick to the top 10, 20 stocks that are here, that are very well covered, very well understood and researched. We find so many opportunities across the spectrum, across the market cap spectrum, that certainly we're very keen to invest in.
But if you're moving back to a top-down approach in a meaningful way, would that mean that you would look to pull some money out of India? I mean, that certainly seems to be the sense that I'm getting from this conversation. Global investors not completely positive, valuations looking expensive, earnings might come back, haven't still come back as yet in full strength. Am I to assume that you are looking to trim down your India positions?
Not really. I mean, as a house, we've been overweight India all the way through. It's been a good call. I think we try and be a little bit more long-term. This is a phenomenal market for long-term investing to get that sort of compounding return that the market does offer you. But of course, there will be periods where the market will underperform. We've been going through one of those for the last, certainly year to date. When you look at India versus other emerging markets, there has been quite a significant underperformance there. But that's, anybody who's just, looking slightly longer than 2 minutes, it's fine. That's just the reality. And, we're quite happy to see the volatility coming back because some stocks, particularly in the mid-cap space, when the volatility comes back, that's when more steady hands can actually look to acquire.
So do you expect a healthy correction or consolidation this year?
I think we've had one. Obviously
we've recovered from there.
Yeah, exactly. It's amazing. Sentiment domestically, certainly, when I was speaking to people here, gotten very negative. I was probably more hoping for a second half recovery. I think that's when the stars will be slightly more aligned. Obviously, there is volatility that could come through from the political calendar, certainly in the next month or two. But yeah, I don't see a reason for the market to roar away at the moment.
Right.
I think we do need more evidence of that earnings recovery.
So if you expect some sort of recovery to come in the second half, which are the sectors where you expect some green shoots to come back?
So I think, the more broadening out that we're seeing of the investment recovery, certainly in certain sectors, we are invested into some industrial spaces. We haven't got any of the retail banks, which obviously with Kotak's numbers that look good, but we've been trying to put money back to work into sectors which aren't quite so overvalued, as some of, for example, the structural plays in the consumer space are looking quite expensive. The staple stocks are looking very expensive as well. But there's plenty of other areas in consumption that still look okay, and quite frankly, it's more economically sensitive stocks as well, where we see stocks which have got some operational leverage to a recovery.
Interesting. Before I get to that point, your answer brought me to looking at your holdings. You don't have a bank in your top 10 holdings. Forget consumer facing, save for an NBFC. I don't think you have a bank in your top 10 holdings.
No, that's quite right.
Wow. So, why, I mean, have you trimmed positions there, or have you not gotten a chance to enter? Are you looking to enter? I mean, what's the scenario here? I mean, so 35% of the weightage and you don't have a presence there almost.
We do own 3 banks, but they're not particularly large holdings, any of them. We did actually reduce our weighting about a month ago.
Okay. ICICI Bank?
Absolutely. Before
I can see that featuring on number 13, so I guess that.
That's one we took out. I just think in the short term there was risk of that whole thing sort of exploding out again, and obviously with the PMB story still rumbling on, we felt we were overweight corporate banks. We just reduced that a little bit for the short term.
Okay, and you. Okay, and the part 2 of your earlier answer was you're looking at playing the story of the corporate capacity utilization theme or the leverage theme moving up as well. How are you playing that? And Jonathan, I don't know what other markets do you look at, but looking at the other EM pack, I know investors might be preferring a lot of other pockets but India. If you do look at a lot of other EM markets as well and then compare India versus the EM markets, to your mind, where does India stand?
Well, obviously on valuation, it's top of the pack. But we often tell investors it always is, and there's a very good reason. There's a number of reasons for that. I mean, first of all, I think where India really does stand out is the quality of the corporates. Sure, not all corporates are brilliant quality, but the point is, we can find as a pack enough corporates that are, incredibly well-run management teams with a huge opportunity that India offers, and that's the reason for the valuation, but the basic reason. And then on top of that, you've got the regulatory regime, the governance side, which India clearly has, and quite frankly, the concept of the shareholder. Some of these other emerging markets, they're fairly new. Stock markets are fairly new, particularly countries that have come out of communism more recently. And that takes a long time to embed the concept of the shareholder. So that's another advantage India certainly does. Again, not all companies particularly pay much attention to it, but most do, and I think that's one of the reasons why India stacks up so well, and international investors do see that. When you look at the compounding returns that investors have had in India over the last 10, 20 years, there isn't, quite frankly, another emerging market which has matched that. So then the question is it all over? Is the good times behind us? And I think actually when you look at the reforms that have happened, the impact of those reforms haven't really come through yet. So for us, the good times are still ahead. The informal to the formal economy, which is, certainly shifting slowly, provides a lot of opportunities for the listed space.
How large would your India investment be, Jonathan, if you are at liberty to say that?
So if I look at our equity investments as a proportion of our equity, we're probably at about 8 or 9%.
And what features on the top? Among the emerging markets, I'm asking.
So primarily, we're mainly focused on the Asian emerging markets.
Okay.
So we have traditionally mainly pitched into China, India, and occasionally some of the other smaller ones. We do have it from time to time also played some of the commodity producing players outside of Asia, Brazil, for example. But there are different issues you face when you invest in some of those economies.
Since you mentioned about commodity-driven economies, I just want to take your view on the metal space, which has been in focus because of the trade war issues. And I do see something like Hindalco featuring among your top 3 holdings. So the rally that one has seen, for the metal stocks in the last 1 year, do you expect that to continue?
I think if we were to push away the political issues emanating out of the US, which obviously provides a bit of uncertainty on the sector, I think if you look at most of the commodity spaces, you saw, after the rise of China and the impact that China had on the commodity spaces, and then obviously the bust that happened a few years back when commodity prices collapsed. And I think most of the commodity countries and companies have readjusted to the new reality of the world today. And so actually, it's been interesting as we've seen commodity prices rise. What you haven't seen is a commensurate sort of rise in output yet. So they seem to be, the discipline of commodity companies seems to be holding. And also you combine that with the actual users of commodities like steel and aluminium, you're not seeing this massive increase in production globally. You know, the reality is, particularly in China, we're seeing consolidation, we're seeing rationalization. And actually we are finally genuinely seeing that, where I think we've talked about it a lot over the last decade or so. So I think the view for us would be we're still quite positive on the space, but in the short term, clearly there's some volatility through politics, unfortunately.
What's the earning growth you're expecting for FY19?
For the market as a whole, I mean, it's obviously adjusting. I think our last numbers, we were on about 17 or 18%.
Okay.
Just slightly probably below consensus.
Yeah, the consensus is somewhere 22 to 23%.
Okay, Jonathan, one final question from my end. What's the big event that you're watching out for? From an Indian perspective, would it be the Indian elections, or do you believe the global banking moves, if at all there is further tightening, and the resultant impact on EMs at large would be a bigger draw?
I think a bit of both, if I'm honest.
Yes, but that's the easy answer.
Absolutely. I think clearly global investors are very concerned about what's happening with the dollar, and then that will have ramifications for the whole EM space. You know, there's no doubt about that. And clearly with US interest rates, obviously, and cost of capital and all those issues. That is, I think, going to be fixating most global investors' minds, certainly for some time ahead. And also, interestingly, the leadership change potentially in the equity space as well. The FANG stocks, those stocks which have led the market up over the last couple of years, not all of them, but certainly some of them seem to be facing a bit of pressure, break-up calls, etc., etc. So the leadership is also changing, which is always causing a bit of disruption as well. I mean, from an Indian perspective, I think clearly the politics is going to be a worry at people's minds. We've got a year or so to go before the election, with a few local elections or state elections to come up, which will provide volatility. To us, it's just volatility. I think sentiment's clearly a bit negative already on India, which we find that quite positive. Positioning is not...
So are you using that sentiment as an opportunity to buy anything around the current valuations?
No, definitely. We're definitely looking at quite a few counters to pick up. Obviously the market's pushed back up again, but we're certainly looking to use volatility to get positions. We got a position a couple of month or so back in that we've been tracking for a long time that had come down. So yeah, we're definitely using that volatility.
Interesting. Okay. Jonathan, great having you. Thank you so much for taking the time out and being with us today. I look forward to have you more often on this forum.
Thank you.
That's Jonathan Schiessl on Countdown on Bloomberg Quint Live. And it's interesting, some of the views there. They, interestingly, don't have a major exposure to the corporate-facing banks or the retail banks, but they mentioned that they will be looking forward to maybe add some positions thereof. There's a bit later on as well. By the way, I'm told the Divan Housing Finance numbers are out. Okay, revenue at 2802. Let's wait and see what the asset quality is like. The bottom line seems to be at par with what we were working with. Watching out for what the asset quality is looking like. Those numbers too will come up on your screen. Remember, one of the cheaper NBFC and the housing finance names continues to remain that though, and those numbers haven't really elicited too much of a reaction. We're waiting for the asset quality numbers to come out before we talk about this one any further. Well, Navneet, just looking at some of the other names and some strong moves that have come in to Bombay Dyeing, Indiabulls Ventures, and Nelco, which has reacted very well as well.
That's why I guess Nelco has been reacting to its earnings. I'm just trying to open the release of Divan Housing. Remember the profits which were expected to come in at about 321, so it's just been in line. It's come in at 312. They had an exceptional gain, remember, in the corresponding quarter. Neeraj was highlighting, I think, let's check if we can get any figures with regard to the asset quality for the quarter gone by for them. The key things to be watched out for this one was the non-retail portfolio, the growth for the non-retail portfolio versus the retail portfolio, and some bit of guidance that the company had to give with regard to its cost structure also going ahead. So looking at the release, EPS, I guess, for the quarter is at about 9.96, which is slightly gone up if you compare it to the December quarter. But we'll just get you more details on that front. Dewan Housing, as of now, is seeing some bit of correction from the highs of the day. 645 is the mark. But clearly, mid-cap IT has been the flavor. Not only today, there are some bouts of profit booking that you get to see. We saw one of that on Friday. But every time there is any bit of profit booking or correction, we're seeing some bit of buying coming in at lower levels. Let's get some analysis going. Go across to Neeraj to find out what exactly he's tracking with regard to the mid-cap IT space. And a lot of them, Mindtree, NIT, Tata, Elxsi, have been hitting their fresh highs every day.
Yeah, I mean, Zensar too. Yeah. And I could have chosen any of those, Navneet. But this is just, I mean, I'm not putting the spotlight on Mindtree. You could have chosen any stock. But hey, for argument's sake, let's just pull up Mindtree. And you know what's interesting, at some point of time in the show, we'll also get you what the 12-month return has been. But just look at what the stock has done today. Another 3.5% higher, 1,088, trading at new highs for itself. Volumes picking up too, and this chart, we'll go to it a bit later on. But essentially, volumes have picked up. Okay, yeah, volumes have been doing rather well for itself. These are the valuations and the EPS growth happening very well. It trades at a substantial premium. Enough sell calls, enough hold calls, not enough buy calls. The 12-month target price way lower than the current market price. Investors know all of this, and yet people are logging into mid-cap IT stocks. That just shows the tailwinds are there within the sector and how much people want to buy. Now look at it. It's an expensive stock, everybody knows. Look at the volumes in today's session. The 20-day average volume in each has moved up, and on top of that, we've had the white line showing that it's trying to match what the 20-day average volumes is as well. For a point of time was higher at the same time than the 20-day average volume too. But clearly shows that people are really willing to pay top dollar to buy into mid-cap IT. How long would it last remains anybody's guess, but enough and more people have come and said that here's a pocket where you can see growth visibility, and it's a pocket that is available at par or maybe slightly cheaper in certain cases than what some of the index names are available. So why should people be worried? Index earnings are not growing in the same vein as mid-cap IT earnings are, so go out and buy that. So enough and more logic will be given by the bulls to justify the kind of valuations that they are trading at. But frankly, if you just look at the PE multiples, it's been a long time that we've seen mid-cap IT stocks trade at the kind of valuations that they're trading at. The ANR for Mindtree will come up on your screen as the last piece. It'll just show you what the average prices are for Mindtree. Now let's get the ANR function, and the return potential out here, 23% negative. So even after very strong numbers and positive commentary from the management, the street believes that the valuations are just so expensive that there should be some downside to the current market price from Mindtree. 22 times, 23 times 1 year forward earnings or current year earnings, let's put it that way. Now we're in FY19, is a bit of a stretch, but maybe bulls will remain bulls.
Well, Neeraj, clearly traders continue to bet on the long side for this one. Pull up anything futures of Mindtree or KPIT Technologies. You'll see how much open interest build up on daily basis that we've been witnessing. In fact, in today's session also, we've seen some fresh long positions for the May future. As you can see, you know what, the futures of Mindtree, they've been trading at a discount for the longest time, but that has not stopped the traders to bet on this counter on the long side. 15% higher, telling you some fresh long positions have been seen. Just want to mark few stocks. India Bulls Real Estate. If you could just pull up, that's your top gainer among the Nifty Realty Index also, which has just gone up in trade. India Bulls Real Estate is now trading with gains of 8.5%. And something like Marico, the numbers come out this week, if I'm not mistaken, on 2nd of May. And that too has suddenly seen a spurt in the last 5 to 10 minutes of trade. Marico currently is quoting somewhere about levels of 330. But with regard to markets, we've come a bit off highs, but still trading firmly in the green. For Nifty, 10,738. Bank Nifty has also seen gains of 1,063. Good time to get in Hemen Kapadia of KRChoksey, who joins us right here in the studio to take us through his technical views on the markets. Hi, Hemen. Good afternoon. What are you doing with Nifty and Bank Nifty now that the recovery has been so sharp in the last 20 to 25 trading sessions? What should one do?
A very good afternoon to you, Navneet. I think things are fine. We've overcome important resistance levels. The open interest addition on Friday was maybe a bit puzzling, but if it is a long position, I guess then we've opened the headroom for 10,850. One would get the feeling that it was IT earlier, maybe it was Reliance earlier, IT still on, maybe it was Pharma some days, and now it's time probably for the Bank Nifty to sort of play its part. 25,400 was important in terms of spot. Next level comes in at 25,800 and 26,200. So one gets a feeling that the bank nifty has been a bit lazy. It's playing catch up. So I guess that's going to lead it forward. So, and stock specific, you have multiple stocks which are looking promising. Navneet.
What about individual stocks, Hemen?
I like a couple of stocks from a positional point of view. One stock which I like is L&T Financial Holdings. Stock has been range bound for almost 16 trading sessions now. It's on the cusp of a breakout. So buy at around 172 with a stop loss of 168, target of 180. Second one is Federal Bank. Federal Bank has once again spent some 12 trading sessions moving sideways without any directional bias, but the indicators have turned positive on the weekly chart. So a buy in Federal Bank also. 98, 96, stop loss 104. And as far as the Nifty is concerned, I have a strangle to sell 11,100 call option and 10,400 put. One can do the next month also for more premium. The idea is not to wait till the end of the settlement, but I have a feeling the Nifty will stagnate somewhere. The current open interest maximum is around, at least on Friday evening, was 37 lakhs at the 10,500 put and 51 lakhs at the 11,000 call. So I've taken that 100 points extra on upside and downside just for safety's sake. So I don't think we look like covering these many points. So 10-4 and 10-11-1 strangle, Navneet.
Okay. I mean, thanks for those strategies. A lot of questions on our social pages, and we'll try and answer some of these. You know, there's a question on Alpha Geo, Jindal Stainless, some call option questions as well. We'll try and answer some of these, but first get in Sumeet Bagadia. He's Associate Director at Choice Broking and joins us on the show with his thoughts as well. Sumeet, thanks so much for joining in. Congratulations, of course, on the big change in your life as well. I believe you just got married, so congrats on that. But Sumeet, what are you recommending viewers do today? One, on the indices, and two, on some specific stocks.
Thank you very much, Neeraj, for the wishes. Well, as far as trades are concerned, I think immediately Nifty and Bank Nifty is looking good to me. From here on, there is a possibility that we might see upside move in the index, and from here on there is a possibility that on high side we can see levels of around 10,800, 850 levels. I think for a trading perspective, one can initiate long positions in Nifty at the current market price. If there's a dip of around 20 to 30 points from present levels, then that should be used as a buying opportunity. And on higher side, immediately we can see levels of around 10,800, and if that is taken away, then extended move can be seen till 10,850 levels. So overall, index is looking strong. One should initiate long positions. As far as Bank Nifty is concerned, 25,450 is immediate support for index. Till the time these levels are not taken away, one should be on buy side. And on high side, one can see levels of around 25,700, 25,800 levels as the immediate target.
Okay, interesting. So, you know, the calls on Nifty Bank seem to be synonymous. So we were talking about this last series, me and Navneet, about how the Nifty Bank was underperforming. Maybe now trying to play a bit of a catch-up as well. So good going there for the Nifty Bank too. You know, before we get to some specific stocks, since we have some queries already, just a couple of them, Hemen. Any thoughts on either Greaves Cotton or Jindal Stainless? They are not the things that we talk about usually, but there are some queries here.
Greaves Cotton, I think the worst is over if I take that view. 113 hasn't been broken in the last 4 years on the monthly chart. I don't think it will. It could take some time, slow moving stock. Like I said, worst is over, and one can see a steady upside. So nothing much to lose from that point of view, and I'd see a further upside. Jindal Stainless Steel is around 92. Support at 75. We are in a corrective phase. The long-term outlook remains positive. Short-term, we are getting oversold. We've had a run-up from 15 to 125, Neeraj, and now we've walked into a correction of a greater degree. I think it's going to flounder, take some time. No clear bias the way I look at it, but not too much of a downside after this 5 trading session sharp fall. Maybe 88 is what it could take support and bounce back at.
Okay, that's the view coming in on Jindal Steel. Hemen, since you're with us, I'm going to just take a liberty of addressing one of the query which has come on stock option. Canfin Home 440 call bought at 13.5. If you could just pull up the 440 call strike of Canfin Homes and check what the current premium is. A viewer of ours is asking, should he hold on to it?
Frankly speaking, that's a Hobson's choice. We've seen an open interest build up today, Navneet. I think that is a short position. It's given a downward breakout from a consolidation phase, which now on hindsight can be termed the distribution phase. Indicators are sell on the daily and weekly. I think further pain. So I think he'll need to exit. I'm not sure if this is the right strategy. He'll need to exit. I have a feeling 400 is support. That's where he can take a contra call and buy the call option again. But as of now, it doesn't look too good.
Okay, a lot of other queries on Maruti and a few others too, but I think we need to get back to some of the other active stocks. We'll keep on answering these queries during the course of the show. Let's welcome in Sanjiv Bhasin. He's Executive VP for Markets at IIFL, joins us right now on the show. Sanjiv, good afternoon. Thanks so much for joining in. You know, banks were missing from the party the last 10 days of the previous expiry. They've come back to the party with a bit of a bang. Last 3 days, Nifty Bank is doing well. Today, IT is participating yet again. What's the call, or what's the call that you've given to your clients over the last 3 or 4 sessions with the markets in and around the 10,700 mark?
Yeah, so the market is climbing all walls of worry, and people who are again doubting the fall and expecting it to prolong, because macros have been at the weekend with higher bond yields and higher oil prices and a weak rupee to combat. But like I said, the worst of the weaknesses may have been played out. Earnings are turning out to be better than expected, and there is a strong pipeline that the second half could be even more robust, given that manufacturing and credit growth is expanding, which is why you've seen select banks outperform, and the rest of them, the weaker ones, are now pricing in most of the asset weakness, which may be a one-off because of the RBI move. So I continue to think that May will be a better month given the volatility of the election, but we think that June, say middle of June, you should be heading towards new highs. Given that globally, I think there will be a much needed rally, which is going to be supported by higher earnings.
Hi Sanjiv, good afternoon. The other pocket which has been in focus is the FMCG pack. We've seen stocks like Nestle as well as HUL hitting their fresh highs in today's trading session. And I believe something like Marico, which is doing well, they come out with their numbers day after. Dabur will be coming out with its earnings tomorrow. And I know for the longest time on this show of ours, you've been giving a call on ITC, and the reason, I guess, could be the valuation multiples compared to either the Nifty FMCG index or HUL itself. It does trade at a discount. But overall, as a space, besides ITC, Sanjiv, is there anything which is looking good in this pack?
So Navneet, we've been very, very bullish on all the consumption plays, particularly the beverage side. I mean, 6,700, 7,000, 7,200. Nestle has been one of our outperformers. We still think 10,000 now is on the cards before the end of the year. Tata Global was another play. I think that is again headed towards 350. Third would have been a Jubilant Foodworks. You mentioned Dabur. We think that and Marico still have a lot of engine in them. We like McDowell's. It's been one of our top picks from 1,800, and now it saw a lot of consolidation because of GST. But we think that is going to take out new highs above 4,000, and we won't be surprised if you get 5,000 on McDowell in the next 1 year. So, however, sum of parts, ITC is still the cheapest stock, given that not only the FMCG and cigarettes business, whether it's ITC Haryali, the paper business, the hotel business, the milk product business, the Wills Lifestyle, you just add all the verticals and you're looking at a stock which should be at least 350 on a fair value in 1 year. We have a near-term target of 320 in the next 6 months.
Wow. Okay. So watch out for that too. When you was talking about technology, Sasken is now up about 15%, and a clutch of these IT names seem to be doing really well. What is not doing well, though, is Reliance Industries. I think it's trading at the day's lows. And remember, it had rallied about 7% in the run-up to the results, and the results weren't particularly great. The question mark, though, Sanjiv Bhasin, is what should an average investor who has a holding in Reliance, and a clutch of them have, do? Is it prudent to get off the stock and invest that money into some other large cap name currently? or will holding the money in Reliance or the investment in Reliance will pay rich dividends irrespective?
Yeah, so our call is continue to hold and add on declines. Neeraj, if one company deserves to be in the $100 billion club after TCS, it definitely it should be Reliance. Now it just made a, it was just a slip and go that they missed it by 40 rupees. But I see no let up. I think people are missing the wood for the trees. Their ARPUs of Jio, the volume strength, maybe a quarter of weak performance on the GRM, but that all is getting priced in. You can't have a conglomerate like Reliance not trading in a $100 billion bracket. So I think as markets start to do new highs, Reliance will be 1100 plus, I think, by the end of the year. So use all declines to buy. All the rhetoric and noise may have already been priced in because the stock had run up far in excess of because of the expectation of results, and we are seeing routine profit booking.
Okay, routine profit booking for Reliance. I think the counter was up 7%, and clearly the numbers were a miss, Neeraj, for a lot of parameters. And the markets have come off their day's highs at 10,724. And Neeraj, you were mentioning, I think it's Axis Bank, which has seen some cuts.
No, yeah, so sorry, Navneet. So that's yes, the top loser, but I mean, yes, and ICICI too have fallen off. SBI has come off marginally. A clutch of names, but Axis Bank is down about 4.5%. So the others have just fallen in the last few minutes of trade. Look at Axis Bank, it's trading at the lowest point of the day, 514 and counting. And I think Yes Bank too has had a bit of a knock from the levels that it was trading at, still in the green, but from where it was trading at, just a bit of a pullback. But Axis Bank is the one which is clearly gone down, and look at that impact that it's had on the Nifty too. The Nifty's come off from about 0.5% up to about 0.3%, so a bit of a pullback in the Nifty as well. Sumeet Bagadia, Axis Bank, any calls?
Well, see, if we take a longer term time horizon, then Axis Bank is a good buy. For a longer term time horizon, one can initiate long positions in Axis Bank at current market price. If by chance there is a dip of around 10 to 15 points from present levels, then that should be used as a buying opportunity. Overall, on higher side, it has resistance at around 550 levels. Once the stock is able to break 550 convincingly on closing basis, then we will see a one-way move in which we can see levels of around 600 in the next couple of months. So for a trading perspective, I think if there is a dip of around 10 to 15 points, then one should initiate long positions. And on higher side, a breakout over 550 will take stock prices to 600 levels in the next couple of months. So overall, it's a buy.
Overall, Axis Bank is a buy after seeing this correction. Remember, the counter was obviously up last week, and Yes Bank also, which was up last week, continues to be the top gainer on Nifty. Let's just pull up Repco Home Finance. I know we've been talking about the stock. It continues to be one of the top F&O gainer also for the day, 644. If you look at today's trading action of Repco Home Finance, it's gone up in really high volumes on the cash side. So it remains to be seen how the delivery data pans out. But Hemen, I was just looking at the futures of it, and there's been some build up on the long side with regard to open interest, which is up 27 to 28%. How are the charts looking for this one?
Oh, it's on the fifth wave on the weekly, Navneet. So, like you said, great open interest built up. Fresh positions maybe around 10 rupees below, but yeah, one gets a feeling that, and also we are walking into that resistance at the 55-day exponential moving average. So, a small cool off would make it healthier. We are at 644. Frankly speaking, I'd be more comfortable buying it at around 632. So if that happens, then that looks interesting enough for a trade.
Okay. Sanjiv, 2 or 3 financial names which came out with results. Kotak came out just about, 40 minutes ago. Is still awaiting the big boy. Over the weekend, Equitas came out with an interesting set of numbers as well. Any thoughts that you have?
Yeah, so Kotak has been the most stable stock because of its focus on retail, and it doesn't delve into too riskier. The risk is very limited. It's been a cost control bank, and now it trades at excess of 3,25,000 crore market cap. So it's very expensive, but it continues to be the best place to hide as far as the private banks go. You've seen Yes come out with stellar numbers, but I still think the after effect of Axis and ICICI will see people just chase Kotak and IndusInd Bank in the near term. The valuation comfort doesn't leave much on the table for an upside. I think it will be a market performer. Equitas is very, very interesting. Their numbers were very stable because their MFI, except from the MFI, the other businesses have grown very steadily, and they are seeing a lot of credit demand in their loan against property in the smaller medium category. I think they've weathered the storm in against demonetization and the farm waivers quite well. And if you are looking for a 2-year story, then this is a doubler from here, given that its focus from an MFI into a scheduled bank is seeing a lot of traction, and it's a very, very prudent management. I would say that at 150 it gives you a good opportunity to be at least at 200 rupees in the next 1 year.
Okay, that's the view on a couple of the earnings which came by recently. Sanjiv, aviation space, especially Indigo, that's the one in focus. The man who propelled Indigo to greater heights, Aditya Ghosh, resigned, and probably the stock's not doing too much in today's trading session, but it saw cuts of nearly 6%, and Jet Airways is something which is doing well. Do you think fundamentally nothing's changed? The shareholders should not get perturbed by what's happening with the management change at Indigo. It still continues to be the market leader.
Yeah, so Navneet, if you take it with a pinch of salt, if you have a change of people where, like I said, perform or perish should be the key. We saw that, last year when Mr. What's his name, the chairman, the CEO of Jubilant left in a hurry, and the stock from 1200 has rallied to 2800. So inherently the brand remains. Look at the positive signals you're getting because of a change of guard at Axis and ICICI Bank. I mean, the banks, once you get a positive name, there will be, a huge upside to those. Same is the case with IDFC Bank. Once you let go of the old incumbent managements and Mr. Vaidyanathan actually comes in place, I would say IDFC Bank is a re-rated stock. So similar is the case with this Indigo. I think it's a very, very strong sector. In the consumption side, it's seen the strongest growth, and irrespective of who comes now, I think that the bank, this aviation industry is going to be re-rated. Once you get a cooling down of oil prices, maybe next month onwards, that will be the the tail in the wind which you are looking for. As a disclosure, at 600 rupees, we've been recommending Jet very strongly. We have a target of 750, and we would say that the market cap discount of Jet gives us a lot of comfort at that 600 rupees for a 25% upside in the next 1 year.
Okay, Sanjiv, Bhasin, we'll leave it at that. Thank you so much for taking the time out and being with us today. Always appreciate your presence on the show. So that's the view from Sanjiv Bhasin of IIFL. LG Balakrishnan, it's a stock that, it's a management that, or the company that came out with numbers. EBITDA was up 20%, margins expanded ever so marginally. The board has approved a 1:1 bonus issue. The stock is up about 3%. They are an OEM supplier of drive chains with about a 70% market share, and they operate plants out of Tamil Nadu and Karnataka. Let's get in Mr. B. Vijay Kumar, the managing director of the company, on the show to talk about the numbers and the outlook ahead. Good having you, Mr. Kumar. Thank you so much for taking the time out. It's been an okay quarter. I mean, I've seen a lot of other auto component companies speak about revenue growth which would be substantially higher, be it CV suppliers or be it PV suppliers. Have things been different for the two-wheeler segment? How is it that you've clocked in about a 12% growth, and are you happy with the quarter?
We are quite happy with the quarter. January, February, there was a dip in the OEM offtake, but then March has been good. The two-wheeler manufacturing is back on track, so I'm pretty happy.
Okay. So you have improved margins ever so marginally. Despite that, the bottom line growth has been lower than the top line growth. Why has that been the case? What do you expect FY19 as a year to throw up?
The income tax is higher, so the profit after tax is a bit lower. But we've managed to maintain the same figure as last year in spite of higher taxation.
True. And part two of my question was, sir, that what do you expect FY19 to throw up?
The current year is going to be good. I expect it to be better than last year. We will reach, we have limitations on production capacity, both in metal form as well as in chain. So we can only tune the manufacturing to give us a little more output for the current year. The new plant in Chennai is coming up. That should start production sometime in January. So both this year and the next year should be very good.
Okay. Sir, I'm just looking at your segmental performance from a segment which contributes obviously lesser to your top line and bottom line. Metals forming, if I look at the profitability of that on year-on-year basis, that's seen a sharp jump of nearly over 70%. Is that the reason why the margins are looking stable? And do you think metals forming will continue to contribute even more in FY19?
That's a good question. The transmission part of the business is a mature business. It's been, we started with that business sometime in 1965. The two-wheelers came in 1990, and from 2000 onwards, there's been a very good growth in the two-wheeler business in India. The four-wheeler business, the four-wheeler as well as the metal forming business is comparatively new. So as we keep increasing and as our reach increases, it should do better and better. The margins should be better.
Okay. Also, I'm looking at your finance cost for FY18 versus FY17. It's come down to 10.5 crore versus 14.5, which was seen in 2017. Could you tell us what's the current debt on the books right now, and how do you plan to reduce it further? We've seen a substantial correction of nearly 30% for FY18.
The total loan position some 2-3 years ago was about 250 crores. From there, we've come down now to about 160 crores total. On the books, it would be about 100 crores. The 60 crores is for letter of credits and, the suppliers' dues. I'm talking about the total debt of the company. Going forward, this will increase to 210 crores because we will be borrowing for the Chennai plant about 50 crores.
Have you borrowed already, or you will be borrowing for the Chennai plant, which you said will be operational from January, I guess?
We will be borrowing 50 crores going forward.
Okay.
We already have 160 crores as total debt in the company.
Okay. Mr. Vijay Kumar, appreciate you joining us today and taking us through your quarterly as well as FY18 performance. All the best to you for FY19. Well, stock clearly, doing well in today's trading session. LG Balakrishnan, margins saw a little bit of uptick, which he rightly mentioned. It was contributed because of the metals forming segment of the company. 1309 is the level, up 3% for LG Balakrishnan. Well, moving on to the chart of the day, the dollar index is set to snap its 7-year losing streak for the month of April, but will it continue to post robust gains in the month of May? History suggests so. And let's go across to Jayesh Khilnani to find out more details on that. Jayesh, over to you.
So Navneet rightly put that the dollar index in fact is on track to snap its 7-year losing streak for the month of April. If you have a look at the screen, that's the seasonality chart of the dollar index. But the real trend lies in the month of May, where there have been more instances of the month that it has gained. In fact, in the last 10 years, only on 2 occasions out of the last 10, the dollar index has given you negative return for the month of May. So it will be very interesting to see if the momentum of 1.9% of April can be carried forwarded to the month of May. However, if you look at the analyst scenario, the Bloomberg terminal actually suggests that the analysts, 29 of them which have contributed to this mean target, have 88.8 as their mean consensus for by the end of 2019. But I also spoke with one of the analysts based in London, Viraj Patel from ING Bank, and he has said said that, watch out for the level of 92.6 or 65 thereabouts, which is also this year's high. In case that level is breached, then you could see a sharp short squeeze, and prices could rally beyond 92.65 as well.
Thanks a lot, Jayesh, for bringing that chart of the day on dollar index. And I guess, Hemen, you too have a view on the chart of dollar index.
90.90 support, Navneet. We've given an upward breakout from an ascending triangle. 92 is resistance. In fact, it could spend some time consolidating, overcoming 92. But I'd say 80% chances of that being overcome. We are heading towards 95 in the next 4 to 6 months, Navneet, as far as the dollar index is concerned.
Wow.
No, that's okay, that's interesting. By the way, just before we take a break, just wanted to mark a couple of other themes. I already spoke about Sasuke, and yes, today the whole day, Bombay Dyeing has been one big mover, up about 8% today. IRB Infra is an interesting move, by the way. It's up about 7.5%. But that single common theme that spreads across almost all stocks at 52-week highs today, the dominant theme has to be IT. I think that pocket has had a really, really strong move in trade. What's not having a good move, though, are stocks like UPL as well as Axis Bank. And boy, oh boy, I think the intraday of PC Jewellers should be brought up now, because I think it has slipped further. Yes, it has slipped ever so marginally, but 16% off now. So not a good move. Bhushan Steel is down 10% at 21. Videocon continues to grind lower. Shrey Infra, bit of a results reaction. Reliance Communication down. HDFC is down as well. Minda Corp is arguably one of the first ones which is reacting and not under an elongated cloud, just maybe a flash reaction today or over the last couple of days. But Axis Bank has had a big fall. Before we go to the top highlights of the day, Hemen, a quick thought on Axis Bank?
Oh, frankly speaking, there's an adjustment process going on. From an intraday point of view, I think it could maybe dip a little bit more to 510, 508. I don't see too much, frankly speaking, downside beyond that. We saw huge volume that day, upward key reversal. I guess it's digesting this rise. I wouldn't be too bearish right now.
Okay, that's the technical view on Axis Bank, which trades with cuts of almost 5%. Well, before we slip into a short break here on Countdown, let's take a look at all the key highlights of the day. From Vishwavir Ahuja, MD and CEO at RBL Bank, to Govind Srikhande, Managing Director at Shoppers Stop. Here out all the key voices on Bloomberg Quint.
Actually, if you track to that guide path, we've actually achieved and exceeded on all financial metrics. Now that 2 more financial years are remaining to that, we are very confident that we will be able to track to the guide path even in the next 2 years. And if I may break down what I meant, is that the 30-35% growth guidance remains. The improvement in margins, which is now almost touching 4% in terms of NIMs, we are sort of happy there, but it may further improve a few basis points.
It may take another, I would say, 6 to 8 months for winding up the leftover portions of phase 4, that is deep rural areas. And everybody is on the job and it will be done so. And in the last 12 months or so, our phase 3-4 boxes that we have seeded is close to 5 million. Overall, we have a tall figure of 11.5 million digital homes, out of which 8.5 million are paying digital homes.
The AUM growth should be around 18 to 20% in the next financial year. We expect good demand in the first quarter of this year because the winter crop has been good. And overall, the demand for the vehicle credit is quite good in the first quarter. Maybe second quarter, due to rains, there could be some slow movement. But again, we expect third and fourth quarter to be very good, because if the construction activities remains high, cement and steel movement will add further to the requirement. So we expect overall the demand to be quite good in the next financial year.
this quarter, we completed all our financial restructuring that we had targeted over the last 2 quarters. So I'm very happy that we have been able to complete all that. So we started the whole financial year at 575 crore of debt. We have been able to reduce it by 488 crores. We have been also able to divest out Hypercity, Time Zone on NGIPL, all of them loss-making ventures. And as a result, what you're seeing is, although the top line growth and margin growth is muted, our bottom line growth is pretty strong. Our EBITDA has remained flat on the standalone basis, but both PBT and PAT have almost gone up by 200% based on the multiple actions that we have really taken. So I would say pretty happy on the overall performance. Yes, if the operating performance had been a little more stronger, that would have helped. But we are targeting a good, strong operating performance in the coming financial year.
Will have an expected impact on prices. You very rightly mentioned that prices are down to approximately 27 rupees. Inclusive of duty as an average on NCDEX. Very honestly speaking, with the implementation of these, it will have an impact in terms of first stabilizing prices and of course with the possibility of a small improvement going forward.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
All right, 28 minutes to go for the markets to shut shop, and the Nifty Bank has recovered some bit of the lost ground, doing reasonably okay for itself currently, about 0.5% higher of the highs of the day, but still doing okay. Yes, Bank is giving some massive support there. It's up about 4%. I think the big movers are the likes of TCS, HUL, or both of which are trading about a couple of percentage points higher. In fact, 2.25% higher a piece for both of the names. 3535 for TCS, HUL at 1507, trading at new highs for itself. You know, while we talk about some of the others, we haven't discussed HUL at length. Before we get to the Fab 4, Hemen, thought on HUL?
Oh, frankly speaking, Neeraj, not much to go on. It gave a breakout way back at 970. We are at all-time highs. I'm not sure how to quantify this, but something like a not fair to compare stocks, but something like a Marico seems more predictable and more interesting looking than HUL, to be honest.
Looks very, very robust. 3.5% for Marico as well. But this consumption theme seems to be playing out. Let's see if any of these stocks, the smaller variety, find their way into Yash Upadhyay's list of the Fab 4 stocks or no. Yash, good afternoon. What's making it to your list?
Thank you, Neeraj. So first up, we have Merck Limited. This one had surged as much as 14% today after reporting a strong set of fourth quarter numbers. Now, their net profit rose more than 50% to 22 crore rupees for the quarter ended March 2018, boosted by a 22% rise in revenues for its pharmaceutical business. Margins too expanded by nearly 400 basis points. So all in all, a good set of numbers. Kalpataru Power had gained as much as 5% today after the company said that it has received multiple orders worth close to 1,500 crore rupees from the likes of IOC, GAIL, Power Grid, among others. Now with this, the company's current order book stands to increase over 14,000 crore rupees, and the management in its press release said that they continue to grow their order book by close to 15 to 20% in FY19 as well. Indiabull Ventures is up about 8% today after the company informed the exchanges that they would consider the proposal for issuing equity shares to a certain foreign investors at its board meeting on May 4th. And the stock is up 8%, as I said. And the rally in midcap IT refuses to cease. KPIT Tech is up for a fourth straight day. The stock hit an all-time high of 258.5. Volumes nearly double the 20-day average. Back to you.
Well, clearly, Yash, there's no stopping for the IT stocks. Thanks a lot for bringing those Fab 4 stocks off today. Well, the other stock which has just gone up in trade is NCC. Let's just pull up the intraday chart of that one. It's gone up on good amount of volumes if you compare it to Friday's volume. So 5% higher for NCC there. Sumeet, on the charts, okay, I think we've lost the connection with Sumeet. We'll touch base with him. But Hemen, on the charts, how is it looking?
Looks interesting. 124, 136. We're on the verge of a breakout from here. I guess we need that formality of a close above 136. Navneet, we are turning positive even on the longer term charts. I think it might not stop at 136 because even the monthly charts are looking good. So short and even a slightly medium to longer term point of view, things are improving. 136 is, I think, important though.
Okay, let's get in a fundamental voice on the show. Avinash, Gorakshakar, Head of Research at Joindre Capital Services, joins us on the show. Now, before I ask you about anything else, Avinash, quick thought on a tweet that you put out in the morning on Merck. The stock is on a roll today, 12 or 13% higher. The results were fairly decent too. There is some transfer of business happening as well. Can you tell our viewers about the development and what it would mean for Merck?
I think, Neeraj, clearly, the markets are expecting that possibly after the, the open offer kind of development. I think probably you could see a lot of revision in this open offer price, and I think that's going to be the key because this is a fairly illiquid counter. But the way things are going, I think possibly in the coming weeks, one could possibly see a revision in the open offer price, and that's possibly driving interest because the valuations even at the current level are not cheap. They're fair to expensive. But if you see the kind of appetite which the global MNC has, one could definitely not rule out a higher price going forward.
Okay, stay on, Jamin. I think I'm told HDFC numbers are out. We'll just try and, okay, yeah, we do have those numbers. So the net profit at 2846 crores versus 2551. Wow, that's a big jump on what was expected. Let's wait and watch what's led to this, but serious beat on the bottom line, the standalone net profit. Let's hope we'll just put in the NI numbers in moments from now, but optically, Navneet, the standalone net profit number seems way higher than what we were working with.
That's right, Neeraj. I think our estimates for HDFC
2551, right?
Yeah, 2551, and they posted a figure of 2846. Yeah, so that's way above what actually we were also expecting. If you look at the revenues from operations this time around, it stands somewhere about 9327 crore versus 8453, which was seen in the corresponding quarter. Couple of the other things, provisions and contingencies, I think that's the number which people usually look at. 180 crore is the number for this quarter versus 148 that was seen in the corresponding quarter of the same corresponding quarter of last year. So far the numbers numbers are looking good, and you can see a bit of spike because the profitability has definitely seen a jump, but we'll wait out for the other key metrics also to watch out in HDFC's numbers. And I think the factors which were highlighted by Shraddha was that the Q4 profit on sale of investments at rupees 3,000 crore, I think that will also be included this time around. Other parameters, spreads were expected to remain stable, and the key thing to be watched out from the numbers will be what sort of loan growth, I guess, they've posted. The expectation was somewhere about 18% loan growth, and also the asset quality. Let's see how the asset quality has also panned out.
Okay. The face of it seems to be doing okay. Remember, we'll have the AMC IPO coming out in about a few days from now as well. But prima facie, the numbers look okay. We'll wait for the other parameters to come in. But Avinash, just a quick response, optically, initially.
No, I think numbers definitely seem to be solid, Neeraj, unless there is some one-off in these numbers. But clearly, as you mentioned, the HDFC AMC issue is coming in the first fortnight of the month of May. So that could be also the trigger point, because earlier we had HDFC Standard Life. I think the markets are probably factoring in not only the AMC business but even the broking business going forward, to go in for an IPO. So these could be value triggers going forward. But overall, operationally, these numbers, if they are purely from operations, I think they definitely are much better than what the street expected.
Ashutosh Sinha of Reliance Securities, who tracks this one closely, joins in as well. Ashutosh, thanks so much for taking the time out. What have you made of these numbers?
Number was above our expectation, and we need to see much more detail about whether this growth has come from self-employed segment or non-personal segment or from personal segment. That will be determining the future course of the profit for the company.
Having said that, what's the call here? I mean, I know HDFC typically tends to trade at peak valuations, and that wouldn't change. But the point that the bottom line numbers have moved up, and from whatever little I can see right now, I don't see too many exceptional items which could have led to do this.
Yeah, so we have currently buy rating on HDFC Bank and HDFC Limited, and we will most probably will continue to with that rating because we will be rolling over to the FY20 in this quarter.
Okay, Ashutosh, thanks so much. I understand you'll have to talk to clients, so I'll leave it at that. Thanks for joining in. Avinash, Navneet, just looking at the numbers, the tax expense has come off and come off quite considerably, despite the fact that the profit before tax is much higher in this quarter. I don't know if there were some individual factors that led to this. There's a deferred tax.
52.
Yeah, 85 crores deferred tax pullback, that is a refund that must have come back, as a result of which the total tax expense has shrunk versus 894 crores in the previous quarter or the corresponding quarter last year to just about 671 crores. That may also have been one reason why it just looks magnified compared to what the estimates were. But Shraddha is here. Before we get further comments from Avinash, Shraddha, what have you spotted in HDFC?
Neeraj, I might repeat some of the numbers. I don't know what you all have discussed so far, but the net interest income has come in about 12% higher. That is in line with estimates. Net profit has seen a huge jump, up 39% at 2846 crores versus number of 2551 crores that we were working with. So clearly 200-300 crores addition to what we were actually expecting. They have updated that the profit on sale of investments for the quarter have come in higher at 294 crores as compared to 49 crores in the last year quarter. This was again something that was already updated before the Q4 numbers when they give their quarterly updates. So the big jump on sale of investments on account of the sale of its subsidiaries HDFC Developers and HDFC Realty, which the management had said will accrue in the current quarter because the transaction happened in January. That apart, with respect to provisions for the quarter, they've come in at 180 crores versus a number of 195 crores. They had said that they would make an incremental provisioning, special one-time number of about 80 crores. So if you keep that aside, it would have been close to 100 crores versus 95 crores just in the last quarter. We don't have the gross NPA numbers yet, but based on that flattish sequential provision number, I'm guessing that there won't be too much change in the gross NPA number either. So spreads, gross NPA number and loan growth are the three other things that I'm waiting to watch. The press release is not out yet, but definitely a pad beat. Nothing looks worrisome in what we've seen so far. In fact, they look like good numbers.
Well, it does look like, because it's been a big beat in terms of bottom line, and as Shraddha also highlighted, the NI is up almost 12%. I think we've also got Kunal Shah of Edelweiss Financial Services who joins us right now. Kunal, what have you made of the numbers? It looks like a big beat when it comes to the bottom line and healthy growth seen for NI as well.
Yeah, so overall at bottom line it's a higher, but there is a tax write-back as well. And when we look at the profit before tax, it's pretty much in line with the expectations. In terms of the overall, maybe what they have been guiding for in terms of the investment sale as well as the provisioning. So there has been, say, the sale in the subsidiaries, and that has resulted in the higher investment gain, of which some proportion is utilized for contingency provisioning. So not maybe in not too much of a difference from what the expectations were on the straight. It seems to be pretty much in line. The only thing is we need to watch out for in terms of the overall growth for them. Q4 is seasonally strong in terms of margins for them. So let's see how it pans out once the numbers are there.
Kunal, hi, this is Shraddha here. The management has kept saying that the subsidiaries are ripe and it's the time to create value. So there's a lot of value, unrealized value in the unlisted subsidiaries. So we've also seen a big 265 crore gains coming from stake sale in HDFC, Realty and developers in the last quarter as well. Do you expect this monetization process to continue for HDFC? And just want to understand, based on your estimates, how much should the subsidiaries now contribute to the SOTP valuation of HDFC, the consolidated numbers?
Yeah, so obviously most of its subsidiaries, they are doing much better, be it in terms of the listed or the unlisted ones. So any which ways we have the bank and the life insurance, which is very much there, which significantly contributes to the non-housing businesses valuation. So a larger part of it comes from these two entities. But besides that, when we look at so what is there in the near term is also with respect to HDFC AMC, okay, which would be coming up for the listing, and we could see say the gains being booked out of that. But overall, in terms of our valuations, around about 55 to 60% of market cap is being driven by the subsidiaries or say the non-mortgage businesses as of now.
55 to 60, fantastic. So just one last question. What do you want to hear from that management, that one key metric or qualitative statement that you're looking for, and what's your call on the stock at these levels?
No, so main would be with respect to the core mortgage business, so be it in terms of the traction on the overall growth, and even in terms of the maintenance of the margins, which has been holding on pretty well for them all across since the inception. But the critical thing is in terms of growth, okay, on this base as to how are they looking, and that too particularly on the individual home loan side.
Kunal, thank you very much for joining us. Neeraj and Avneet, back to you. Looks like a decent set of numbers, waiting for more details to come in.
Yeah, thanks for that, Shraddha. The stock has done reasonably okay too. Hemen, any thoughts on HDFC, the stock, before we get the final fundamental view?
Well, frankly speaking, we've seen a range-bound movement, Neeraj, 1830, 1900. I don't see it breaking out from here otherwise. Short-term bias positive, but we need a close over 1900 for something significant to happen. We've been in this range for 12 weeks and counting, 1760, 1900. So a positive bias, nothing earth-shattering.
I think numbers definitely seem to be good, and except for the tax write-back, I think what would be important, Neeraj, would be the loan book growth on the mortgage business, and more importantly, what kind of roadmap for HDFC AMC, because that is going to further boost the quarterly numbers for the coming quarter. I think overall it seems to be a decent number on the operational metric front, on the at least at the PBT level. The PAT seems to have been boosted largely because of the write-off, but otherwise an overall pretty good set of numbers.
Okay, stay on, Avinash. Much more to speak about. In moments from now, we'll get in what dealing rooms are recommending in the session today. But as we speak, the indices about 0.5% higher. The Nifty about 44 odd points. So no slippages, no big slippages. Just bring up PC Jewellers, the intraday, and see what it is doing. It was down about 16% about some time ago. Now another
Can I add something to that?
Yes, please.
It may just enter into the F&O ban for day after's trading session tomorrow being a market holiday. Because I was just looking at the total open interest. I guess on Friday it was 89%, and the way the stock has been falling, clearly traders have been creating fresh short position at every level. So I think we can watch out for this one for day after as well.
Wow, but 20% Navneet, and it was down, but a sharp exaggerated fall in the last few minutes of trade.
Yep, it has been, and plus let's not forget on Friday it was down 25%. Today it's down another 20%, and it's come off from those levels of 500 or something.
I think if we replay the interview that we did on Friday, it will sound the same.
Yeah, nothing has changed. I think we should get the management back, because he did mention they get a weekly report from the exchange. By now, I'm presuming he should know who's been the seller in the stock, though he said he's not received the report as of now. So let's see whether they come out with any sort of clarity who's been selling the shares of PC Jewelers.
Okay, we should get in Darshan and Yatin any moment now to talk about what dealing rooms are recommending in the session today. That should be up any moment, and we'll then get in Hemen Kapadia's thoughts on what are the stocks that he would recommend as a closing strategy. Just wondering while we wait for that, what's corrected today amongst other things is Reliance Industries, which is down about 3.5. UPL has corrected about 3.5 too, so that's not looking all that great. You know, in all this excitement of Axis and what's happening to ICICI Bank and a couple of others, we've kind of ignored UPL today, Hemen. On the charts, UPL down about 3.5 ahead of the results, didn't have any big bang moves, but correcting post them. Is there a trade here?
The trade,
if at all,
could be a short, but not at 730. Neeraj, the short would be at 736, not at the 730.
Okay, so don't go out and short UPL, and don't take a short trade going into home. That's the call that is coming in from Hemen Kapadia. Okay, time now, a bit delayed, but time now to get you what dealing rooms are recommending in the session today. Yatin Mota is with us, and back from his holidays, Darshan Mehta with his channel checks too. Darshan, let's start off with you. We've been missing you here on Countdown on the Dealer's Corner. But what are you learning from your sources?
Yeah, so at this point of time, some of the stocks that's been spoken about. One of the stock that's been actively spoken about today is GNFC. It's moved up almost 4% in today's trade. Some of the HNIs are actively accumulating. And if you look from the recent lows, the counter has moved up almost close to 25 to 30%. So there seems to be a lot of traction. It's moving up on decent volumes today. 1.7 million shares already traded. So GNFC is something that, a couple of dealing rooms did indicate in trade today. The next one that dealers are talking about is Indiabulls Real Estate, again up almost 8%. A large foreign brokerage is actively pushing this to its clients. So Indiabulls Real Estate continues to see traction. And one of the stocks that's been spoken about not very often, but that's Zensar Tech. It's up 1.5%, but there's a buzz of a potential corporate announcement that could come in on the counter. That's what we heard from a couple of dealing rooms. Decent volumes today, almost 85,000 shares on Zensar, which is not one of the most liquid counters, but Zensar is something that we'll watch out for. But Yatin, what are you hearing?
Darshan, Axis Bank, that is one stock which is correcting in trade after the move that we saw last week, and dealers on the basis of F&O trends are recommending a STBT kind of a strategy. So Axis Bank, dealers expect some bit of, trading downside to happen in the next 1 or 2 days. Watch out for IRB Infrastructure, and they will be coming out with the earnings this week. And ahead of the earnings, we are looking at some good traction which is happening in almost 10 million shares traded in the market today. So dealers are bullish as far as this infrastructure player is concerned in the road construction. And do watch out for Jamna Auto, as we have HNIs lapping up shares of select auto ancillaries. Of course, we have been talking about the stock, but the momentum and the movement here is quite strong. So dealers expect some further upside on the back of HNI action as far as this small auto ancillary is concerned.
Wow, we'll watch out for that. Thanks a lot for that. Yatin back with the bang is Jamna. GNFC up about 4.5. I think the HDFC management will start speaking any moment, so we'll have to cut across there as well. Okay, Keki Mistry has started. Let's cut across.
As well as the quarter ended the similar date, March 18. And I thought what I'll do is spend about 20 minutes summarizing the key features of the results. And then if you have any questions, we'd be happy to take those questions. So this period or this year, and particularly even more so the last quarter of the year, saw a very strong growth in individual loan business. So individual loan approvals for the year increased by 31% compared to last year, and our individual loan disbursements increased by 29% compared to last year. Now on a base as large as ours, obviously 31 and 29% is a very substantial growth, and much higher than what it historically has been. On an AUM basis, the total outstanding loans stood at 3,99,511 crores, which is almost 4 lakh crores, slightly under 4 lakh crores. The growth in the total loan book was 18%, 18, and this is on an AUM basis. On a balance sheet basis, the growth is higher. On an AUM basis, the growth is 18%. Individual loans also grew by 18% on an AUM basis, and non-individual loans grew by 17%. During the last 12 months, we have sold loans aggregating to 6,453 crores. So the quantum of loans sold this year is lesser than the quantum of loans sold last year. But it is possible that the bank, which is one of the entities which buys a lot of our loans, can buy back some of the loans in the following year. If we were to add back the loans that were sold during the current year and then calculate the growth numbers, the individual loan book growth would have been 26% and the overall growth in the loan book would have been 23%. On 31st of March, we had a total of 39,364 crores of loans which have been sold by us and on which we get a weighted average return of 1.27%. Now, when we sell a loan, as we've explained in the past, we do not book the difference between the rate at which the loan is sold and the underlying rate of the loan. That differential is not booked as income upfront. That differential flows to the P&L account on a regular basis. So on 31st March, on the 39,364 crores of outstanding loans, the weighted average return we get on those loans is 1.27%. So we earn this 1.27% in addition to the income that we earn on loans which are appearing in the balance sheet. A lot of focus in the current year, in this year, has been on affordable housing. So if you look at the loans given to borrowers in the economically weaker section or in the lower income group, the growth has been substantial compared to last year. In terms of numbers, the growth has been 38%. In terms of value, the growth has been 19%. On an average, we do about 8,200 loans every month to people in the economically weaker section and in the lower income group. The growth in the economically weaker section loans compared to the previous year in value terms was 32%, and in the lower income group was 41%. Average loan for borrowers in the economically weaker section stood at 10.2 lakhs, and for customers in the lower income group stood at 17.4 lakhs. Our overall average loan stands at 26.4 lakhs. If you look at the breakup of the loans outstanding at the end of the year into the different segments, individuals, corporate, developers, and lease rental discounting, individual loans constitute 73% of our total loan book. Construction, and last year this number was 72%, so it's slightly higher. Construction finance last year was 13%, and even this year is 13%. Lease rental discounting stands at 8%, similar as it was last year. And corporate loan stands at 6% compared to 7% in the previous year. So not much change in the mix, just that individuals has gone 1% higher, corporate has gone 1% lower. If you look at the incremental growth in the loan book from April 2017 to March 2018 and break that up into the different components, individuals, corporate, construction finance, and lease rental discounting, then individual loans constituted 74% of the growth in the loan book. Construction finance constituted 16% of the growth in the loan book. Lease rental discounting constituted 14% of the growth in the loan book, and corporate loans was actually a negative 4%. So corporate loans this year were lesser than the corporate loans at the beginning of the year. As you know, under Indian GAAP, we reflect all our investments at historical cost and not at fair value. So if we were to look at only the listed investments where there is a transparent stock market valuation that you could look at, the unrecognized profits, which is the difference between the market price of the share and the carrying cost, that number is as high as 1,55,680 crores. This figure of 1,55,680 crores obviously has not been recognized in the accounting books, but it represents the unrecognized or unrealized
Okay, that's Keki Mistry. Of course, 3 minutes to go for the markets to shut shop. So before we do that, just final thoughts from our experts. Maybe we'll take in Avinash Gorakshakar's idea after the market closes, but Hemen definitely can come to you. A top closing strategy. If you have a trade on the index, tomorrow is a holiday, then that too.
I don't have a trade on the index, Neeraj. I have a BTST on Siemens.
BTS target?
We're at 1127, 8 and 16. 8 stop loss, 16 target.
Okay, that's a BTST coming in on Siemens. 1127 is the current price, and markets are actually going to be closing with gains of nearly 50 points. That's about Nifty. So definitely it's been a great start to this truncated week. Let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, so far, second day of May series, it's turning out to be good.
Yeah, second of the May series, a lot of green on the screen. You know, we haven't been seeing too much of red. Every time that I remember now in the last 1 week or 2 weeks that I've stood here and tried to wrap up the markets, there's been a tick of green. The broader markets too did reasonably well today. They started off better and they have ended better than what the large caps did. 1.3% for the small cap space definitely spells that there will be fair bit of traction on the advanced decline ratio as well in the session today. But the Nifty gainers and losers, let's start off with those first. Yes Bank 3.5% up yet again. I think the heavyweights like HUL and TCS have participated. So 2.5%. TCS about 2.5%. Kotak Bank 2.25%. HDFC about 1.5%. This would probably be the top contributing stock on the index today. So banks, to an extent, IT have participated, and when you have the two heavyweight sectors, which constitute northwards of 40% of the index, you probably would believe that the markets won't be falling. Reliance has come off about 3.5%, ending at the day's low. Axis Bank, yes, and down there, I think some pain in ICICI Bank as well. So despite Axis and ICICI Bank and a couple of others not doing all that well, courtesy what's happened to the financials, courtesy what's happening to SBI and a few others, we have managed to end well on the Nifty Bank as well. But the broader markets too, a fabulous story today.
There were a lot of gainers in the broader markets today, and let me start off with something like Repco Home Finance. It's also one of the top F&O gainer for the day. A lot of long positions were seen for this one. The counter went on high volumes as well, so 7% higher for this one. RB Infra, that rose in the second half of the session, so that too is having a good session, 5.5% higher towards the closing 279. And Merck, A, the numbers were pretty good for this one, and B, as a part of the global deal where PNG will be acquiring the domestic operations of Merck, and also that open offer price, that's the trigger for this one, 11% higher. And clearly the IT pack, after seeing a bout of profit booking on Friday, made a good comeback. So something like Hexaware and IT Technologies, both the stocks hit their all-time high levels. And also from the FMCG pack, Marico, which comes out with its numbers day after tomorrow, that was in focus. And NCC also rose in the second half of the session. Marico closing at day's high, and NCC also closing just around the day's high level. Just going to quickly take you through a couple of losers. PC Jewelers was down 20%. A lot of fresh short position at every level has been seen for this counter. Shrey Infra reacting negatively to the numbers. Minda Corp saw some bit of profit booking in today's session. And also from the financial space, something like Canfin Homes, that was down. And also SBI Life, that saw a correction of between, I guess, 2 to 2.5%. Well, besides that, let's just pull up and see how the market breadth today actually panned out in today's trading session. Because remember, we've been looking at, Neeraj, how the broader markets have been performing. And I think Friday was all about the benchmark indices, and today it was all about the broader markets. But definitely, we did see some bit of heavyweights among the Nifty constituents participating.
Yeah, so pull up the advanced decline ratio and it should be positive. Okay, let's stick with this first, then we'll get the advanced decline ratio. As thought of, Reliance is right up there on the losers list, but HDFC Bank interestingly pips HDFC to the post in terms of the top contributors by virtue of its weight. TCS too, 2.5% gains and therefore doing what it is doing. In Kotak Bank post its results 8% higher, but Navneet was speaking about the advanced decline ratio, should get the market breadth on the screen. Well, contracted a bit, but still about 1.6% for the small caps. It did seem that the day in the broader markets too was fairly active.
That's right, Neeraj. Let's just pull up the participation, the turnover plate as well, and let's see how that panned out. So definitely the NSE cash turnover was lower. Let's also remember tomorrow being a holiday, traders would not carry over their positions. So the volumes definitely seem to be on the lower side. Even the NSE F&O volume is below the average turnover of what we see on daily basis of 5 lakh crore.
Yeah, but the interesting thing is that the Nifty Bank is now starting to play a bit of a catch-up. The last 3 or 4 sessions corrections, we're having that do reasonably well. Okay, final thoughts from our experts. Hemen, Kapadia, I'll come to you first. You just gave us a call on the indices and the fact that what's the trade position looking like there. But if you can give us a slightly detailed answer of where do you believe the Nifty Bank could, or how do you believe the Nifty Bank could shape up in the next few days compared to the Nifty, because the April series was all about relative underperformance of the Nifty Bank. That seems to be starting to change a bit.
Absolutely, Neeraj. We've seen an upward key reversal, almost a bar reversal coming in the Bank Nifty spot last week. We are heading towards 25,800, Neeraj. Support comes in at 25,410. That is important. And if that holds, we are heading towards 25,800 and at the risk of sounding overly optimistic, probably at 26,100. So the days of the underperformance seem to have gone away for the time being. A performance in line, if not an outperformance, seems to be in the cards with a move probably towards 25,800 needed as far as the Bank Nifty is concerned.
Interesting. Okay, so that's the view on the indices from Hemen, Kapadia. Avinash, we couldn't take your stock recommendation while the markets were on. Keki, Mistry happened to come in and speak. But what is it that people who want to put in fresh money to work can do currently?
No, in fact, Neeraj, in these kind of markets, we are looking at stocks which have not actually moved significantly, and we have actually started recommending a stock called Cochin Shipyard. Now, this is a small defense players compared to a Bharat Electronics or maybe a HAL. But what is interesting is they have a monopoly in the shipbuilding business. They have a large ship repair facility, and they went public sometime in 2017. At an IPO price of around 435. The stock has not performed that well, but if you see the business model and the capital structure of the business, a very strong margin of almost 18-19%, virtually debt-free business, and very strong ROEs of almost 20-22%. I would believe that for a company which would be generating about 400 crores of profit this year, and hopefully by FY20 a profit of close to about 600 odd crores. A multiple of around 13-14 times on FY19 is not very expensive. I think considering the fact that shipbuilding activity in India is going to pick up, company is known globally and the order book is almost 3,000 crores plus. They have 2,000 crores of L1 orders. So clearly the visibility could come in, but clearly from a longer term point of view, this value definitely looks pretty attractive.
Watch out. After a while, I'm seeing somebody give this as a recommendation. Cochin Shipyard, a stock which hasn't moved too well off late, but maybe that's one reason why you should indeed go out and buy it. Avinash Gorakshakar certainly believes that. Avinash, Hemen, thank you so much, gentlemen, for joining in today. I really appreciate your time. And from me and Navneet, thanks so much for watching this leg of Countdown, and see you day after tomorrow. It's not often that we say that on a Monday.
That's right. I'm working tomorrow, Neeraj.
Fair call. Take a break and in fact wrap it up on this leg of Countdown. Up next is Bloomberg Quint's Market Wrap.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call.